The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And good afternoon, everybody. This is Dave White, once again into the breach, dear friends. And we've got another beautiful day down here in Florida. Finally, the weather's broken a little bit. And I'm here, your squeezably soft host, once more into the breach, dear friends. As we start this day off, we'll take a look at the S&Ps, basically off 6 points, 1.8 billion shares on the New York Consolidated Tape as we start the show, and looking for a week that is very muted in movement, especially when we compare it to the movement of stocks, let's say like in China, where we saw Shanghai down, was it 6% in one day? A lot of mixed messages in China. Probably the most amazing thing now is it's not even affecting or even starting to affecting our markets, which I think is it's very telling, I think. Anyway, a few other things that are really kind of jolting the market. The commodities, of course, way down on that China news. We've got silver off almost 50 cents on the day. Gold rather flat. Maybe it's trying to say it's a currency again. But, what can you say? Probably going to need a few more days. More interesting to me was the push by trying to move the currencies around and seeing that the currencies really, at least the dollar, really didn't, they had it down a little bit this morning, but dollar index still printing off very strongly at 97.02 as we start the show. Over the next few days, I think they've been trying to keep this dollar down, and no matter how much they push it, it looks to me like it is going to 100 on the dollar index to retest that high before we get any significant weakness that's not encouraged by our government or the Fed or the Treasury or someone else. Right now, I think they see that as the control rods of what's happening in our economy. They don't want it to go up. They're trying to push it down, but every time they lay off of it a little bit, it starts to strengthen up again. And at 97, looks like about the second or third false breakdown of that 96.30 level that I've been watching for a while on the continuous contract. Anyway, as always, we like to start the day off with a little bit of history.
Then it's all just a little bit of history repeating.
And, I was trying something different today. We will move it. I will move the microphone right in front of me. I was seeing if I could put the microphone behind the keyboard today instead of front of it. But it looks like that's going to sound like I'm in a cave somewhere. On this day in 1982, as a bull market suddenly materializes out of nowhere, and I don't know where that came from because I know exactly where it materialized from, and that was a change of policy and mostly tax policy that everybody tries to deny actually turned around America in the early 80s. Daily trading volume on the New York Stock Exchange exceeds 100 million shares for the first time, with 132 million shares changing hands this day in 1982. Of course, pretty much what we have changing hands every hour these days. But we look, 1.8 billion shares today on the consolidated contract, which includes the Amex and all shares traded on the ECNs that didn't exist in 1982. So a lot more liquidity these days than there was. Of course, a lot more stocks. Back then, there was probably 500 stocks that were actively trading each day. Now we've got about somewhere around 3,500 stocks that trade more than 300,000 shares each day. So we've got quite the inventory. There's always something moving out in the stock market. But what else can you say? Windows and Microsoft. Do I have a chart up for Microsoft? No. Let's go ahead and get it. MSFT, Mr. Stofty. Not doing a whole lot out here. It's kind of in a central trading range. But the news on it comes not from Microsoft, but others. And they are taking a look at it. Right now, it looks like there is somewhere around 45 million people that have already upgraded, or at least machines that have been upgraded to Windows 10. They basically had about 15 million in the first few days. After that, Microsoft's been kind of mum, but we are seeing basically the third-party people looking at how much it's taking out of the Windows 7 and the Windows XP crowd, and it's going long and strong. A lot of people have downloaded it. Of course, it's more important for Microsoft long-term. It's not going to change this next quarter's earnings, but of course, they have a built-in store where you can buy programs, and probably going to add at least some incremental sales. But with somewhere around 450 million people using Windows every day, probably a good opportunity for them to get into 100 million installs in probably the next 4 weeks, which a lot of people think that they will get into. But I think that's good long-term for them. And it, of course, also gets a lot of people upgraded to current technology so that they can sell them new technology. About every 3 months, they have new features planned. Windows 10 will be called Windows 10 for a while. But each quarter, they plan to release new updates. The one out today basically sets Windows 10 with real-time streaming for video games at HD resolutions. So a little bit of extra features every day out there. But kind of a long-term story, not a short one out here for Microsoft today. Probably the most interesting thing I saw today, other than the earnings, we'll talk about Walmart, some of the others later, was the earnings out on Sprint. And Craig Moffett, who's a founder of Moffett and Nathanson, they're a big street name out there, got into some discussions about earnings, which you don't find a lot for the most part in CNBC coverage or Bloomberg. I mean, they'll kind of carry it on the outside, but probably one thing that you should be aware of if you're thinking about playing any of these carriers is just how kind of funny, not funny ha-ha, but funny tough this accounting schemes are getting for these guys to continue putting in the kind of earnings they have. But I went and looked through it after I listened to his interview. I've got a small clip of it I'm going to play. But I talk about this a lot in the solar business, where all these, it's basically the same thing. It is a con job to get and make books look drastically different than they would be by means that are at least devious, probably should be illegal, but are not. Anyway, here's Craig Moffett, and he's talking about Sprint's earnings today. Thought it was quite illuminating.
From the carrier's perspective, though, there's a huge difference in the accounting, and unfortunately, it has distorted the accounting for the whole sector, because as you do the sale of phones, it accelerates revenue and therefore accelerates EBITDA and earnings. All the companies are now reporting inflated revenues because of that, and also inflated profitability. And Sprint's gone one step further, and by leasing the phones instead of selling them, they actually take the cost of the phone off the income statement entirely, move it to the balance sheet, and that further inflates earnings. So Sprint is getting 50% of its EBITDA right now from accounting changes, and it has nothing to do with why we upgraded the sector. In fact, it's sort of a negative for the sector that the accounting quality of the sector right now is very, very poor.
Did you get that? Very, very poor. How many times have you heard anybody on Wall Street that wasn't short a stock actually say that, which gives you an idea how tough it was to find this clip on CNBC's website. It was appropriately buried in the bin. It took me, I had to wait a couple hours to find and dig it up. But it's no different. These games are being played, and accounting games are being played in the solar field, especially. It's basically the same scam, which is they're leasing these things out so that they can take the money today. And, of course, it will not be there tomorrow. And generally, this is done just because the CEO wants another quarter, doesn't want to get thrown out of his job. But just thought it was very interesting, especially I know a lot of people are used to, I don't know if they do anymore, like to play Sprint. But a day of reckoning is coming where this will all come out in the wash. But I just thought that was probably the most interesting thing today, at least for people out there talking about the market, stuff that I didn't already know. Wi-Fi blocking is getting extremely expensive. I just think it's kind of very interesting to see that people are still trying to do this. But if you've ever been to a convention center, they try to nail you for everything. I remember my boss in the Javits Center in New York City getting in a knockdown, drag-out fight with a derelict who was hired. He was one of the union goons that they have out there overcharging you. And, of course, he was quite proud of his EE electrical engineer degree and quite proud that he had a PhD in electrical engineering, and was somewhat miffed to say that they had to get a union goon to come plug in something to an AC circuit, that you couldn't do it yourself. And there's a lot of this kind of stuff. Well, apparently one of these companies set in a scrambler so you could not use competing Wi-Fi service, and they could sell their $80 a day access to the company's Wi-Fi networks. This has been going on quite a lot. We talked about it in some of the major chains of hotels that are doing this. But kind of interesting to see that the FCC is getting tougher on these folks. $750,000 fine against Smart City. And sounds not so smart. But a great deal of these big hotel chains have made a lot of money in this in the past, and the FCC is getting on them a little bit. Well, not a little bit, a whole lot. They find a few of them. In the future, I don't think that they're going to be getting these exorbitant rates in the future. So maybe they need a few more guests than trying to screw guests over by illegally jamming Wi-Fi signals. I thought that was interesting, too. When we come back, we'll talk about some stocks. We'll talk about options this week and how they are and what they are telling me. So we'll be back in a minute. You have plenty of time to call me at 877-927-80.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Had a comment in the den that think I'm unfriendly to unions. I don't know what can ever make you think that, but I guess when it comes out of your paycheck, it is different. And I always remember the 1994 convention I went to at McCormick Center in Chicago. And quite interesting in that it cost us $1,450 to ship our booth and probably half a trailer load worth of stuff to the McCormick Convention Center. $1,415. It was $1,500 to move it from the dock to the little square where we were setting up our booth. And that was the last week that we had a convention, or last time that both the SMPTE and the convention for television equipment ever had a convention in Chicago. Everybody got too mad at it and mad at them. It's okay, not having a problem with anybody getting a job. It's the shakedown. And the union higher-ups could care less if anybody had an actual job. They were more interested in extorting all that cash off the shipping docks. And like I said, since it was partly my company, it came directly out of my pocket. And probably why I'm not a big thrill. Now, go to Las Vegas. They're pretty good about it. They tell you they need people, but they're top notch. Everything else, Chicago, not so much. New York, not so much. So if you're going to do it, you're going to shake somebody down, you better get some quality people like they do in Las Vegas, where I was always treated incredibly fairly, even though they charged us out the yin-yang for it. But I enjoyed it. Anyway, I wanted to get to some other stuff today, other than my war stories of conventioneering and being in Las Vegas for 8 weeks a year. What else is out there? Not so much. Where's my chart? I'm trying to find my chart. Oh, there it is. Good enough. Had a discussion with somebody before the show about options and what they can tell us. And occasionally I'll show you these charts as we get into options expiration. Last week, basically told you that I was looking for a market that is somewhere pinned around 2,100 on the S&Ps, and you can tell a great deal. Other people have done work with something called Max Payne, which is looking at the number where the most people would lose the most amount of money. And I guess the discussion, most people just think, well, that's the number and that's it. And the answer is a little different than that. What you will find is that if it is worth somebody spending the money, they can move markets around. But if it's not a big deal, they will not. And pretty much all the charts are out here basically pinning to fairly close to what we're doing for the current price points. But it looks to me like if they close this thing out at 2,100 on Friday at expiration, they'd be none too happy. Now, when I was talking to the person before the show, I said it has to make some economic idea. And what you're really looking for is not the Max Payne number, but looking at the risk profile that market makers that sell options want to get into. And what I'm showing you now, in fact, let me zoom in a little bit more, is the QQQs. So, of course, we closed out at 111.43, which was very high on the profit side of calls for the QQQs expiring on Friday. But what you'll see is that this thing is pretty flat all the way down to 104. And what that tells you is they think that the chances of higher prices are probably fairly nil. You'll see that the chart really starts taking off at about 110. So that's telling you that they're really looking for either prices at that level or lower. And, you know, for $100 million, is it going to be worth them moving the market around? Probably not too much. They'll be happy if it closes below 110. But for them, the profit really doesn't change very much all the way down to 104. And that's what you have to really understand, is that for these guys, 110 to 105 doesn't really make any difference to them. There's no reason for them to push the market around. But if we look at some of the other stocks, like the IWM, you've got a pretty good point out here at about 124. Will they try to push this thing up a couple bucks? They may. Can it drift up there over the next couple of days? It might. But unless this thing moves up $3 or $4 either way, they really don't care. They're just going to try to keep it pinned where it's at and let the options expand.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Let's see what else is going on. Anyway, we're talking about options because, of course, I'm looking for a fairly flat market through this week. I think there will be some opportunities for last-minute options, probably late Wednesday, maybe Thursday. We'll have a little action into the weekend. I suspect that action into Friday, if you're expecting any movement, will probably come in the form of a short squeeze in some of these stocks into Friday's close. So I'm looking for some stuff. As I said, late last week, I've gone 100% cash. I'm sitting on my hands, waiting for the next big opportunity. Right now, doesn't seem to be a great deal out there. We're going to look at some of the stocks that are moving. And, of course, just because there's not an opportunity today doesn't mean that there won't be one tomorrow. So we've got to keep on our toes and keep a little frosty. Anyway, as we said before, it's not so much exactly that you're looking for the number. You're looking for the risk profile that option market makers are taking into Friday. Do they think that there's going to be any movement in the markets? Do they think that it's going to be that they don't know, and so it's very wide? I've written a white paper on it, and if you want to get it, just email me at path@tfnn.com, and I will be glad to email it to you. But I don't know, it's 10 pages or so. But it goes through the basic theory of how options can help us trade into options expiration. And for the most part, about 85% of all options go unexercised, and that can tell you kind of where The most likely point is that they will expire once you get close to expiration. I start using this technique the Wednesday, the week before expiration, and it will tend to track in all the way till Friday, about 80% of the time. Of course, if you think that it's going to break that, there's a great deal of money to be made on the opposite side, and that is when it does not. Actually, they cannot hold prices in there, but with very light volume and late and light summer trading going in for this week, it's kind of tough to really get these markets going one way or the other. In fact, what we were looking at here, we're at 2097. We're off 5 points on the S&P cash. We're halfway through my show, and we still can't get, we've got, 1.9 billion shares. So volume kind of be light. In fact, tomorrow is probably going to be the highest volume day of the week. Probably a little bit less volume on Thursday, and then very light volume on Friday. So if you're going to be playing something and expecting it to move, probably going to need to be commodity based. Probably not a lot of movement in actual equities, although a few of them will be. Of course, tomorrow and after the bell tonight, we've got some stocks reporting. But after the bell tonight, ADI, Lazy Boy. In the morning, we're going to be looking at more retailers, Target, Lowe's, Staples, and a few others. After the bell tomorrow night, I don't know if you really have anybody that's going to move the markets. Going into Thursday, I mean, it's pretty light. A lot of stocks, but nothing, again, that's going to move the market. After Thursday, maybe HP could move the market. Maybe Ross Stores, maybe Gap, maybe a little bit. But all these are retail stores except HP. Maybe that could move the Qs a little bit. But it's going to be kind of quiet. And, of course, Friday morning we've got John Deere. And that could move the Dow a little bit. But that's about it. So we're going to go back and start looking at some other stocks. Of course, Walmart came out with earnings. And we'll take a look at those real quick. WMT. And as they say, they whiffed on earnings, they whiffed on revenue, and they said some words that a lot of people do not like to hear on Wall Street, which is that it's going to take 6 months or a year to turn this around. They're working on it fairly strongly. We did break the previous low. We've already done it with significant volume. The July 1st low at $70.36 had 10 million shares. We've already got 14. When you look back on this, we've already broken through and got the volume that October 16th of 2014 had. So we've broken that one also. And what does that open up? The next probably big area on Walmart is the gap up that started its move that goes back to the 21st of February in 2013. That gap has remained open. It's got some decent volume on that day, about 20.4 million shares. So you probably want to go back and look to that date and that gap. But that opens up a price where support should come in, and that is low a day at about $65.92. So a rather big stock that doesn't move very strongly, but that 66 high $65 level is probably the next support area that this thing has. And again, you've blown away everything with volume now for this huge consolidation range that goes back to June 24th of 2013. So a pretty big gap. And again, even the CEO himself is saying that this is a long and big ship to turn around, and 6 months or a year to get everything straightened out. Other things that I thought were interesting was a huge rise in shoplifting. They give it the term shrinkage. I don't know why they don't say theft, but they say shrinkage in the industry, and they said that that's gone up rather dramatically, which I thought is kind of interesting. Maybe it's where these stores are at. Maybe the people at the lower side of the income are more apt to do it because they're stressed now. Maybe it's more socially acceptable to do it in some areas. But kind of interesting to see that that shrinkage number has gone way up over the last 3 or 6 months, and maybe give an indication that the people at the lower end of the economic scale are being pressured. And just one thing to think about. I'll probably be looking at those shrinkage numbers again, and nothing to do with Jerry Seinfeld or Seinfeld and shrinkage, but that is it. What else do we have out here? Well, wanted to look at a few stocks. That was one of them for Walmart today. Hang on, let me get my list of other things I wanted to look at. Lennar, earnings out this morning, and permits going forward. It has broken out of that area. The one thing we have to worry about on these breakouts, of course, is light volume. When we look at Lennar, the last high was April 6th, $53.67. It's broken above that fairly decently today. It's got 3.6 million shares going up against 4.7 million shares. There's a school of thought that doesn't say that we're in light volume end of summer trading, and therefore you should take the volume as it comes. You know, if this would be like a half day, I'm probably more interested in it. It just doesn't look to me like these things are really breaking out with a lot of volume. HD also wanted to see whether or not we're actually getting the kind of volume that would say this thing is really going to town. HD looking a little bit better, of course, lows in the morning. But you were looking for 8.4 million shares. We've got 8.5 million shares already. But so many of these stocks have broken out over the last 3-6 months on just tepid volume and come back into their trading range that I would be very wary about it. If I was long Home Depot, I would probably take my cash now and see as it pulls back to 120 again, 119, if it does so on light volume, and maybe then it's ready to run. What else do we have out here? MU way off today. The takeover for Micron is being abandoned. I told you thusly some time ago.
I informed you thusly.
Yes, I did. I informed you thusly that there was no way that the U.S. government was going to allow China to buy Micron. And they are finally saying that they are giving up because of political resistance. Just that it's a fairly inexpensive stock out here, probably much more interesting to most people. Kind of bounced out of there today, back on lighter volume. Again, we've talked about what they're going to be doing next year in the first quarter. And I suspect that if there is a buy in this, it's going to be after this consolidates and finds a bottom for a while, and probably after the first of the year on that new memory technology with Intel. In the meantime, it looks to me like the best you can hope for is this thing consolidates for the next 3 to 6 months ahead of them actually having a product that is almost a monopoly, just them and Intel involved in it, and probably going to make a great deal more money than everything else. But it's been a very quiet quarter for new PC sales, and just not a lot of things that are going to really push Micron. And of course, in the meantime, margins continue to slip on the existing DRAM products that they do sell. So keep an eye on it. Of course, copper fell out of bed with China. We're down to 2.25, probably on our way to $2 on copper. Freeport McMoran still headed down and lower today. Metal futures, everything but gold looks fairly horrible. I guess we're going to get clued in on that in the next few hours with Tom O'Brien, and of course with Andy Heck in his commodities hour at 5. But I just, it's hard for me to see that there's anything in copper that really signals any kind of low in that market as China. The real question is going to be how China opens up tomorrow, and if it puts even additional problems on those folks. Speaking of China, CTRP. After, of course, China was down about 6% overnight. we see a little weakness in C-Trip, not as much as you might think. Volume did pick up from the pop-up higher yesterday. Still looks to me like this would want to go back at least to the $66 range where this gap has been acting as support. It had higher volume on the August 12th low than it did on the August 28th low. So you at least got to come back and test that $66.37 low. And my guess is if China continues to slide, that C-Trip will also. Of course, all those China stocks kind of weaker today. VIPS, JD, a lot of the other ones. On the positive side, WCG had a nice pop. It's back up to its highs. It's got a little bit better volume. It's going against its March 20th, 2015 high at $95.09. Was 600,000 shares. Kind of pierced it, but it's pulled back into the trading range. This is WellCare healthcare plans. So it's back up at the highs, but not really able to break it so far. And, of course, going to be interesting. Back in technology, we've got Tech Data, TECD. They're a distributor of a lot of computer products. They had a pretty wicked, nasty downgrade from Merrill, Bank of America, and really got hammered a lot more early. Recovered at least half of that today, but still down and on volume for Tech Data, and maybe that doesn't bode well for these distributors the next couple of days of earnings. Haynes Celestial. Is this Celestial or is it Haynes? Yeah, it's Haynes Celestial. Down on fairly decent volume also. And they reported Q4 EPS in line, revenues in line, but they are guiding down and talking about the almighty dollar. Can you believe that? Anyway, they've got a nice gap. Should be the first level of support at $62. Probably heading to this over the next few days. But guiding down, pretty much all these stocks are priced for perfection. If you don't give them exactly what they're looking for, you will be sold. You will be accumulated. Alcoa, again, when we look at any of these metals, they continue to be weak. I talked a great deal about Ford and how Alcoa got to its previous highs. But it looks to me like, of course, the Ford F-150 aluminum body continuing to sell lightly, and doesn't look, especially with low fuel prices, that a great deal more cars are going to be made out of aluminum. Of course, when they went to these highs, that was the big story that they were telling everybody in the 17s, and that was every car next year, every car in 2 years is going to be made out of aluminum. You got to get on the bandwagon, and you got to be willing to pay $3 grand more for a Ford F-150 made out of aluminum than a Chevy or a Dodge. And this seems like every time everybody runs to trying to make everything fuel efficient and cheaper, but much, much more expensive, fuel prices come back and smack them in the rear end. Well, that's what's with Alcoa. There isn't all that much demand for aluminum. Oh, we've got more to talk about aluminum when we come back. Give me a call, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Anyway, we're looking at Alcoa, a few other stocks to take a look at out here today, and see if we have anything else. Juno, it was a nice little pop in this stock today, so we'll take a look at it before the end of the day. Juno Lighting, a big LED lighting firm, and I think that's probably the bounce the last couple of days, probably on the anticipation of Home Depot and some of these other folks, and the building permits gave pretty much everything back. It's still up a little bit out here. One of the stocks that did move, it was up 5% earlier today. An upgrade pretty much on the back of Home Depot. I was looking to see if there's anything in this one. Looks like it still needs to come back and retest 37.96 one more time. That's area pretty much support in this, so we'll continue looking at that level. Trying to see if there's anything else out here that I want to look at before the end of the day. But I think, let's take a look at Intel real quick. We talked about that. They're releasing some new products, and it's not been the smoothest rollout for the new chips that they are getting out the door. But most of these chips are aimed at mobile. And, of course, they've got big customers for those that build their own motherboards for laptops, that kind of stuff. Not a whole lot of movement in this. you've got it did exactly what you want to do if you want to rebuy it, which is it had a giant gap up. That gap happened on the 13th of June last year, or July, yeah, June last year. So it's been over a year. It came back and tested that gap up that had 122 million shares with 42 million shares, and it's back over on the right side. So some level of support. My guess, though, is you pretty much have everybody going back to school now, a lot of laptop sales, and doesn't look like that's still moving the needle on Intel very much out here. So maybe get one more retest of that 2762 gap area before this thing flattens out. But I think probably later in the fall, computer sales are probably going to pick up a bit, probably just a little bit flat right now still. But I tell you what, if you're buying a PC, I can't imagine there's going to be a better time to buy one than right now with all the back-to-school sales. I think they've got a little extra product that has been out there. Wanted to look at one stock before the end of the day, and that was Avago, and look at how it's trading. It's back into these gaps that basically are two gaps. Now, of course, this is a play on Apple. It's in the Apple ecosystem, but continues to act rather weak. And we've talked about what I'm calling peak smartphone for a while. And, can Apple meander its way back up to 120? I think maybe it can. But especially with the news of the way that Sprint and the other carriers are really starting to change the policies and the way that they subsidize smartphones is incredibly weak for Apple, but also incredibly weak for companies like Avago. So I'll be watching this and see. My guess is the next few days, maybe the first part of next week, that it's going to get back into these gaps. And that's going to tell us a great deal about the Apple supply chain, but Apple going forward now that it's gotten down, to 109 before it bounced. Probably going to go back to 109 at least, and maybe we'll get a heads up from Avago before that. In the meantime, sell when you can, not when you have to. And we'll look forward to Tom O'Brien for the next 2 hours, and then Andy Heck for the rest of the day. See you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.